Imagine putting your hard-earned money into the stock market and watching it vanish overnight. Scary, right? Now imagine the opposite. Your money steadily growing, quietly compounding over years, making you financially free. That's not luck. That's discipline. And that's exactly what Benjamin Graham's legendary book, The Intelligent Investor, teaches us. Warren Buffett calls it the best book on investing ever written, and for good reason. Today, we're breaking down its timeless wisdom into lessons you can actually use, whether you're just starting out or already investing. Stick with me, because by the end, you'll see why this 1949 classic still runs circles around most modern investing advice. So, who was Benjamin Graham? He's often called the father of value investing. Born in 1894, Graham lived through the Great Depression, a time when reckless speculation destroyed millions of lives. His career on Wall Street and later as a professor at Columbia University gave him unmatched insight into the psychology of markets. One of his students? A young Warren Buffett, who built his fortune on Graham's principles. So when Graham speaks, it's not theory, it's battle-tested wisdom. The core idea of the intelligent investor is simple but powerful. Don't be a speculator, be an investor. In other words, instead of chasing quick profits, focus on buying assets that are fundamentally sound and undervalued. Investing intelligently is less about predicting the future and more about protecting yourself from mistakes, risks, and emotions. Graham says the real enemy isn't the market, it's your own impatience and fear. Lesson 1. Mr. Market is your business partner. Picture this. You have a partner named Mr. Market. Every day he offers to buy your shares or sell you his, sometimes at crazy high prices, sometimes dirt cheap. The trick? You don't have to listen to him every day. Graham teaches that the stock market is exactly like this, irrational, emotional, and often wrong. Intelligent investors wait patiently for the right opportunities instead of reacting to every swing. Lesson 2. The margin of safety. This is Graham's golden rule. Always leave a cushion between what you pay for an asset and its true value. Imagine walking across a bridge. If it's built to hold exactly your weight, it's risky. But if it's built to hold 10 times your weight, you're safe. The same goes for investing. Buy at a discount to intrinsic value, so that even if things go wrong, you're protected. Lesson 3. Defensive versus enterprising investors. Not everyone has the same appetite or skill for investing. Graham divides investors into two camps. The defensive investor wants safety and simplicity. Think index funds, bonds, or blue-chip stocks. The enterprising investor is willing to dig deeper, research undervalued companies, and hunt for bargains. Both are valid. The mistake is thinking you can outsmart the market without doing the work. Lesson 4. The biggest risk is you. Markets rise and fall, but the real danger is emotional investing. Panic selling during crashes or chasing hype during bubbles. Graham stresses discipline. Create a plan, stick to it, and remember that wealth is built slowly. Investing is a marathon, not a sprint. So, how do you actually use these ideas today? Treat the stock market like Mr. Market. Don't react to daily noise. Instead, set long-term goals. Always demand a margin of safety. If a stock looks too expensive, wait. Patience is a superpower. Know which type of investor you are. If you don't enjoy analyzing businesses, stick with simple strategies like index funds. And most importantly, control your emotions. When markets crash, remember Graham's advice. Prices may fall, but value remains. Think of it this way. Being an intelligent investor isn't about being the smartest person in the room. It's about being the most disciplined. Benjamin Graham's wisdom is timeless because it's not about chasing trends. It's about building wealth with patience and principle. The market will always be noisy, but you don't have to be. Ask yourself, are you acting like a speculator or an intelligent investor? If this breakdown helped you, hit subscribe so you don't miss the next summary, where we'll dive into another life-changing book that takes these principles even further. Stay tuned, because the next video might just change the way you think about money forever.